The stock markets are subsidized by the American people. If you think your future will be assured by your contributions to tax-deferred savings and investments plans created by the government, you better think on it. Many of us know how the government panders to the stock markets and protects them with bailouts and stimulus. The stock markets are further subsidized by the American people, and the people are being systematically robbed. There are several ways this is done. One way is through the contributions by individuals and other interests in tax-deferred savings and investment programs. We know them as 401ks, IRAs, etc. Billions of dollars are paid into tax-deferred savings investment programs each year. This has enormous influence on the markets and drives stock prices upward. Money contributed to tax-deferred programs is going into the stock markets continuously. Simply stated, every week there are payday buyers. The money contributed to these tax-deferred plans is placed with mutual funds and other investment houses in order to make purchases on behalf of participants in stocks, bonds, and other investments. Investment companies don't sit on the money. They purchase financial instruments very quickly after they receive the money. Each week, millions of dollars flow into investment companies from businesses and individuals participating in these plans. This flow of funds from these plans is very consistent and predictable. This is the holy grail for Wall Street because the markets for hundreds of years have never been consistent or predictable. Thousands of books have been written by stock market gurus on predicting stock market behaviors since the creation of the stock markets. The Wall Streeters 100 years ago were doing their utmost to tie stock markets to business valuations and every possible tool they could find to predict or analyze the markets. You, as a participant in one of these tax-deferred savings or investment plans, make your contributions and trust the Wall Streeters to manage your money prudently. Think about the logic in this scenario. If you are a Wall Street trader holding shares of Sticky Valves Corporation and you were getting bids on Monday from buyers at $30 per share, would you sell at $30 when you knew you could get $40 on Friday when the payday buyers, mutual funds, and investment houses were buying to fill orders for the tax-deferred plans? As a broker, naturally, you would hold your price high as possible and try to push the price higher as you got closer to Friday. This type of strategy for selling would effectively drive the price up on the stock over time. The Wall Street broker gets better prices for stocks and is able to continuously move the stock prices upward with continuous application of this simple strategy. This is an oversimplification, but the point is, the Wall Street brokers know they can get more whether the money comes in on Friday or 3 weeks in the future. Why sell for less when you know you will have guaranteed buyers you can count on? Over time, this kind of guaranteed buying causes stock prices to continue to move upward. After a couple of years, the prices of stocks and other similar investments become very overpriced and overvalued. You can see for yourself by simply reviewing charts of market indexes and more prominent company stock prices over time. There is a pretty good analysis tool you can use to evaluate the values of stocks. It is called book value per share. The book value is a derived value from many factors, but basically it is an indicator of what a stock is actually worth based on real value components. You can also see the book value per share of the stock market indexes as well on some websites. Most of the market indexes at this time indicate book value of indexes are approximately a third less than the market value of the index. This basically says the indexes are overpriced threefold. Yes, even though the stock market is not very exciting to many at this time, The market is overpriced and overvalued based on the book value of the various indexes to stock book value prices. The book value has always been a fundamental or basic value that prudent investors applied when evaluating stocks. A brief note about book values. This number is not a very good indicator of value as documented because this tool is used by investors. Therefore, the accountants and number crunches within companies are always interested to value businesses higher. In turn, there are some very clever financial manipulations used in calculating book value. We have had many accounting maneuvers exposed over the past few years, exposed by corporate failures and misconduct. This is not new. Since accounting irregularities do have a good deal of prominence, it would probably be sensible to lower the book value when you view it. Many investors just multiply the book value by 60%. This way they are saying the book value is overstated by at least 40%. Another way the markets are subsidized, contributors to these plans cannot just take their money out of the 401k or other tax-deferred savings investment plan and do with it as they will. Withdrawals are seriously penalized by the IRS, and current tax rates are applied to withdrawals as well. So is it your money after you put it into a 401k or savings plan? Now comes the bad part. After a few years of the overpricing practicing and pushing up the prices of stock per share as compared to book value per share, the greedy Wall Street brokers start licking their chops over the market that is so overpriced and oversold. These Wall Streeters are just waiting for anything to indicate negative sentiment, such as a crisis event or financial debacle, for them to pile on and suck all the overpriced value out of the markets. This is a perfect setup for them to start short selling and otherwise driving stock prices into the tank. When you put your money into a tax-deferred savings plan, do you really own it, or does someone else? If you can't take your money out of those plans and do with it as you will, is it really your money? The tax-deferred programs being tied to the stock market will always make the market subject to major corrections as long as the money is locked in by government restrictions. When people have individual freedom to be in complete control of their investment, then plans like these can serve the people. Yes, the government thinks we are too stupid or otherwise incompetent to manage our own investments. The current system will never serve the people, just Wall Street. Below are a few links where you can research information on book value for yourself.